Welcome everybody. My name is Matt Birtwistle. I'm the manufacturing lead from HSO UK. It's my pleasure to be joined by Fahim Khan, who is a senior economist with Make UK, the manufacturers organisation. We regularly have this catch up each quarter to discuss the results of the Make UK manufacturing survey. So it's a great pleasure to have a look at quarter three with Fahim today. Just to begin with, what's the take? What's the highlights from your perspective, Fahim?
Thank you, Matt. I mean, that was a great summary, and it's a pleasure to speak with you again. We do this survey quarterly, and generally it's a very strong indicator of how manufacturers are doing, and it gives us a good temperature of how the performance of businesses are going every quarter. And this year so far, it's been generally quite positive, at least in the first two quarters of the year. We saw manufacturers seeing their order books grow and their output was increasing, and they were finally investing again, and that was great to see. And most businesses within our membership predicted that Q3 was going to be another great quarter for most of us. As you mentioned, we were quite surprised, slightly caught off guard by how mixed the final results were. And manufacturers continue to invest, and that's still going on, but output had turned negative for the first time in several years. And we did not anticipate that because our members told us that they believed that output would be strong. Conversations with businesses suggested that the summer period may have been more quiet than expected, and actually maybe there were more businesses on their holidays during the summer period, and actually Q4 may end up being slightly better, but that remains to be seen. And as you highlighted, the point on the domestic market picture was perhaps the explainer on that situation. Now, that by no means creeped up on us unexpectedly. We actually saw a weakening indication of weakening domestic market performance in the previous two quarters as well. It was still positive, but they were certainly doing much worse than how domestic market order books performed in 2023 and 2022. And exports have been effectively the savings grace for manufacturers. And so that is still going well, but we know most SMEs in the UK particularly do rely on the domestic market first, and that is generally the more important sector, and that's why we've probably seen the decline in output.
Thank you for that. And I think the other thing that obviously of major significance that's happened has been the changing in government. But given those pressures upon SMEs that you were just highlighting there on the domestic front, what's the view in terms of the industrial strategies that we've all been very patiently waiting for, and the opportunities for encouraging investment that we hope that this government will actually start to stand behind? What's your views on that?
Well, we were extremely pleased when Labour announced that they would be taking forward an industrial strategy in the UK. I think there was a lot of mixed messaging prior to the election about what that industrial strategy would be, what industry might be at the heart of it, or who it was going to be for. But it was good to see that even in the King's speech, it was highlighted that the Industrial Strategy Council would be built, and they would have sector representation from different industries. And I think our conversations with the Labour government have been quite positive till now, that there is a strong desire to have some sort of long-term vision for the UK, despite the very negative sentiment that's been displayed by the more public-facing members of the Labour government about the deep hole that we're in terms of the budget and the missing £20 billion in tax revenue, which puts the UK in a slightly more difficult position. I think the way we're going to see this approach is that, if comparing it, let's say, other countries in the West Coast, where it's like the US putting massive fiscal support, or you have the European Union doing very similar types of actions, it's going to be about how we create a competitive business environment to make it the UK an attractive place to invest. And the upcoming investment summit is going to be an opportunity for the government to display what the UK is going to do to make that our country an attractive place to invest, not just for domestic firms, but also to attract foreign investors. And that will be critical to the SMEs, because most big manufacturers in the UK, they rely on the demand that's generated by end users, which creates demand within the OEMs and the tier one manufacturers, who then create and filter that kind of wealth generation throughout the supply chain that affects all the many different value-add specialized manufacturers in the UK.
Okay. No, very interesting then. So with that in mind, I guess it's helpful maybe just to start to drill into some of the findings of this quarter's survey. And to begin with, why don't we take a look at the finding where, production has contracted for the first time since 2020, and I'm curious to understand what was behind that, and the reasons as to why. Is this a short-term thing? Is it just a little blip, or is there something more substantial behind that?
It's very interesting, and it's difficult to say whether or not it's a blip until after the fact, when we've seen what happens in Q4. But certainly the contraction in the output balance, which suggested that across our sample there have been more businesses that have seen a decline in production than those that have seen an increase, was quite unexpected for us. And one of the reasons for that is we have been observing a declining in order books, particularly in the domestic market, and manufacturers within different industries, particularly what we had seen certain sectors like in electronics and mechanical equipment, rubber and plastics, industries that tend to supply the construction sector, or sectors that are kind of huge consumers of capital equipment, had been the main contributors to that sort of declining domestic order books, and which had resulted in a negative impact in domestic SME manufacturers. On the other side of that, order books overall wasn't too bad. There was a bit of a slowdown where between Q2 and Q3 because of that domestic market slowdown, which had overall impacted the domestic market output. But export orders actually improved in that same time. So there is something to be positive about. But the interesting thing is that the sectors that saw the decline in the domestic market were also the same sectors that saw the improvements in the export markets, which suggests to me that whilst our UK manufacturers are not maybe investing in plant and machinery as much as we'd like to see, foreign businesses are buying those products. Which suggests that there may be European manufacturers, for example, that are buying all the digital technologies that the UK manufacturers are making, which from a sales point of view, that's great news, but then it adds a little bit of a concerning twist, thinking, are the manufacturers outside of the UK progressing that kind of investment faster than the UK manufacturers are? Because if you look at who's buying what, that does create this situation like, where is this going? Why are all the EU manufacturers buying the really modern technologies?
Let's have a look then and just touch briefly on the employment situation. Again, I know from our own work that we do with our manufacturing customers that demand for skilled, high quality workforce is never diminishing. But what were the findings from the survey from your standpoint?
The results of the employment balance was quite interesting, because we reported a negative balance, suggesting that overall the employment, the recruitment side of things in manufacturing may have declined in the third quarter. And actually we saw the same thing in the third quarter of last year. So I think at this point I'll take a pause to share a slide very quickly. So if we take a quick look at the performance of employment over the last, not just in the third quarter, but if you look at the last 3 or 4, maybe a couple of years or so, Q3 tends to be a bit of a negative quarter, or a pessimistic quarter for employment. We had a negative balance for employment, which are represented by the red bars on this chart in Q3 this year. But if you look at third quarter of last year, we had a negative balance, and the third quarter before that, which wasn't a negative balance, but it was a decline. And if you actually keep going back, you seem to see an evidence of this, that there is a potential chance that what we may be witnessing, and I still think it's too early to say, may be a cyclical behavior of the sector. It could be down to the change in shift patterns or temporary workers. It may be that because more and more workers go on holidays during the summer period, and so their contracts are slightly geared differently. And so I think it's not easy to say whether or not the decline in output was the main cause of the declining employment. I think that's a relationship we can't connect at this point. However, we do need to be, and it's worth acknowledging that there's a lot of regulations and legislations that are up for change in the employment side of things, and of course there's the Labour government's Make Work Pay mandate, which is bringing in a whole host of changes to employment law, and manufacturers, whilst as a body we are generally encouraged that it's a good thing to make work practices fairer for employees. There are some changes there that are actually making manufacturers quite nervous about those changes, and I think that may also have a partial impact on employment making decisions. Overall, I don't think that's going to change the fact that manufacturers have a labour shortage in the sector, and that is going to remain a problem. According to the ONS, there's still about 60,000 vacancies that are still live in the manufacturing sector. And if you do that as a ratio, there's about 2.5 vacant roles for every 100 jobs in the industry, which is still historically one of the highest. So despite that minor decline, we don't expect that decline in employment is going to persist into the next quarter as well.
Okay. Interesting times ahead then, potentially, especially again with, as you're saying, the changes that the government's bringing in. Obviously, we've seen the Bank of England reduce interest rates, and inflationary pressures have certainly declined in areas such as energy costs and such like. But one thing that did stand out was that even though that's happening, and so input costs may be reducing, the pressure on margins is still quite significant, and the ability for manufacturers to increase prices is not really there. So what's your thoughts on that particular challenge?
The relationship between price and margin is very interesting, because there was a period, I think maybe it's 2 years ago now, where manufacturers were effectively able to charge anything they wanted for their products because there was so much demand for goods, particularly raw materials, that prices would change effectively by the hour. But we have now reached a situation when demand slows down, your price kind of setting power declines with it. And so what we've seen is manufacturers are raising prices at a slower rate, and that from the Bank of England's perspective is a good thing. It means that the work that they've been doing by keeping interest rates historically high has had the intended impact of slowing down demand and restricting that inflationary behavior amongst businesses. The challenge is that what we see is that manufacturers would probably like to raise prices at this point because demand is slowing down, but they're unable to do that, and that is having a negative impact on their profit margins, and that is actually reducing their ability to make money effectively, and that is concerning. If it only happens in one quarter, we wouldn't be concerned about that, but this is actually a problem that's persisted for several quarters now, and it's only so long a business can go on losing money before they start to be put at risk, and you start to consider whether or not this business is still a healthy business. And so that relationship, at least in the near future, will continue on. I think from a government perspective, they need to look at, okay, if the domestic market isn't where businesses are able to actually thrive and grow, we do need to look at maybe perhaps the export side, and actually there are opportunities there, but we also have a lot of challenges there. We have some issues with the European Union and the agreement we have in the Trade Cooperation Agreement that makes it very bureaucratic and expensive to trade with European countries now. We don't necessarily have a huge amount of support available to make it easy to trade with the US or other countries around the world, and if the opportunity declines domestically, we do need to solve this margins challenge, saying actually we need to help businesses seek opportunities abroad, and that's one of the things that I think an industrial strategy needs to tackle, is how do we make that export strategy, how do we make Britain a global organization that British made goods can be a part of every supply chain around the world. That should be the objective.
I think one of the closing pieces I would like to touch on again, I'm always struck by this. I mean, our manufacturers are hugely resilient, but business confidence still remains high. So, what do you think's behind this optimism?
It is bizarre because I feel like I talk about the confidence every quarter and it never seems to match up with any negative performance. Manufacturing business confidence has gone up again this quarter, and we're happy to see that. I think it's the highest it's been since the recovery period in the pandemic time, so in 2021. It's only the fifth time in history, in our survey history, that the business confidence metric has exceeded a 7 score. So we rank it out of 10, and it's only the fifth time it's exceeded 7 in history. So it's quite, things are quite positive. And I think what we're seeing is, yes, manufacturers are incredibly resilient businesses. They're incredibly quite positive businesses. They look forward to the future, and they don't dwell on the past. And I think what we're seeing and why the confidence is so high is, despite the slightly turbulent economic environment even that we have today, and even with the change in government and the uncertainty around a long-term industrial strategy, businesses have been firefighting for several years now. Ever since the referendum vote in 2016, it's just been challenge after challenge after challenge, and that has changed the way these manufacturers operate, has changed their perception of what a good day is in the business environment. And I think what we're seeing is that manufacturers always look back and say, things, we've seen the worst of it, and a slowdown in the third quarter over one particular year doesn't mean that this business is going down, because we've survived much worse. And I think that's what we're seeing being represented in the confidence metric, and that's really, really good to see. It's bizarre for an economist like me to see people being happy all the time, but we love it.
All right, Fahim. Well, once again, I would like to thank you and Make UK for your great insights on all the work that you do in support of the manufacturing sector. We certainly do appreciate your time today. So thank you once again.
Thank you.